Some years ago, I remember a TV program. William F. Buckley headed it up. Maybe some of you saw it. Maybe some of you, a distinguished member of our panel, was on it, in that program. But they spent some hours discussing the IRS problems. And I think we'd all like to get rid of the IRS. The problem that they finally concluded, left and right, they generally agreed that there was no real saving in the IRS or any change that could be made, because the real problem, no matter what kind of a tax you have on income, is determining income. And that's sort of what Robert's saying, that you have this monstrous IRS, and their basic function is to determine income. And
all right, well, let's let the panel jump in on this. I've always been concerned, if we're going to have a federal government that's going to collect $3.5 trillion, there's going to be a brutish tax collection agency.
Look, there's no polite, cheerful, non-invasive, non-threatening way to steal 20% of what the American people produce on an annual basis. You can't go and take it from people by force or the threat of force. Please send in the money or. And so while we're talking about tax reform, the elephant in the room is we need to reduce the size and scope of government, which makes tax reform easier. I'm not interested in tax reform in order to generating more economic growth to make the state bigger. So we do need to reduce the total size and scope of government, because the government, we should be thinking maybe 10%. Look, in 1774, when we were colonists, or our relatives were colonists, or people we someday would come and meet as relatives were colonists. 1774, 1 to 2% of people's income went to the government. Taxation in this country was 1 to 2%.
We didn't have it, but we didn't have an IRS, and it wasn't an income tax. And the whole point is, you're absolutely right. If we get rid of the income tax, we get rid of the IRS. And if we have like a national sales tax, a consumption tax, we're already set up. Corporations do not pay taxes, only people pay taxes. Corporations collect taxes, they collect sales taxes all the time, and there would still be theoretically an IRS, but it wouldn't be in our affairs. It wouldn't be violating our individual constitutional rights. It would only be used to make sure that basically the larger companies who have lawyers, accountants, human resource departments, they handle the IRS on a regular basis and keep the IRS in their place. It's the small business person and the individual that gets beat on and can't afford to defend themselves against the IRS, and that's where the abuse is. And unless you have been audited by the IRS and you're a small business, you really don't understand what they can do to you and how they can hurt you.
Actually, Connecticut had a faculty's tax. They looked at you, you're a fine young man, we think you could make X, send 1%. So that wasn't income tax, it was their guess as to what you could make in income. But 1% is not as bad as some other numbers. Like, we had a revolution in this country, a war with Britain, over not income taxes, but when they decided to collect lower excise taxes and tariffs at the border. All taxes engender tremendous hostility. I'm not sure there's one that people cheerfully pay. Our goal should be to keep them as low as possible.
By the way, in 1929, before the Depression discredited free markets, even though the government caused the thing, the federal government was about, 3% of GDP, state and local about 8 or 9%. Imagine that. Local government 3 times the size of the federal government, and we had the most sophisticated economy in the world. We did it with 3% of GDP.
All right, next question.